Hi everyone. I'm Toby Turtle, the official mascot of STO Summit Spring 2025. We're excited to share the recorded sessions from the world's leading summit on security tokens and real-world assets. Now, let's dive into today's talk from one of our global leaders. Hey Augustine, over to you.
Up next is Matthew Schneider, CEO of Building PropTech, to discuss data standardization in tokenization.
I still have power.
I do. I am on my third cup of coffee,
Okay.
having gone through the
Thank
morning
you.
and moderated a couple of great panels. And for people tuning in live or watching us on YouTube, I certainly recommend that you go back and watch the conversations that I got to moderate about tokenizing tangible assets and compliance. And I get to touch on a little bit of compliance and standardization in my presentation. I will be talking about data, which is not always the most exciting conversation, but it's still a very, very important one to be had. It's the foundation of everything that we're working on. Some would say it's even the new oil. If this is an industrial revolution for capital markets, then data is oil. That means we have a responsibility to collect it, refine it, and then use it in all sorts of creative and walk through some of these concepts. I know that it can be a little wordy at times. I've certainly had some more visually appealing presentations, but we're going to work our way through this. My QR code is there. You can find out more about me and building. Let's see. Perfect. So really the purpose for this talk is to demand a little bit more consistency of tokenized financial products. Real estate is currently a fairly ambiguous asset class, shrouded further by tokens. If we rethink how blockchains are used in private markets, we can not only reverse this effect, but actually offer further transparency and follow through on that promise of creating investments that people have greater confidence in. So I'm coming off of a couple great trips. First, I was in London with the University College of London and FIBRE, which is the Foundation for International Blockchain and Real Estate Expertise, to talk about data standardization. So we had great minds, academics, professors, industry experts and entrepreneurs all in one room trying to figure out whether it's down at the real estate level and how we're collecting information to how we're applying that in systems and in governance. How do we make information more consistent so that when we share, we communicate clearly and we're all on the same page? And then I also had the exciting opportunity to be in Dubai for Token 2049. I attended the Stake real estate event. You can see me with Red Swan CRE, Stakes, and Magma Real Estate in those first two pictures there. And I think this really raises the question of, if we all want to work together, how do we have a common language for our real estate, for our data, and for our smart contracts to really be able to cooperate? Looking at tokenization, I think it's always been a question of digital infrastructure. And that's because digitization precedes tokenization. These are truly two separate items. We have to ask a few questions in order to find the underlying problems in private markets that are ultimately holding back tokenization. Right? First, digitization, then tokenization. So I have three cards here. First, how much of the real estate workflow is actually digitized? The documents, the software, how onboarded are people? This lays the foundation for everything. Next step is, if we do have some of this data and it's been digitized, how effectively are we using it and processing it? Has it been extracted from siloed software, right? QuickBooks or design tools, whatever we're using for project management, it all sits there, but we need to get it into a common place so that we can all look at it and use it. Then it has to be cleaned. Too much data is noisy. We want something that is actionable. How do we store the data? Is it in a safe place? Is it compliant? Then the verification. If we have data and I'm sharing it with someone else, how can we allow them to trust it? Then the business case, I have data, what am I going to use it for? If you're going to go through the hassle of collecting it, hopefully you're going to be able to use it to make a better business decision. And then the analysis of it, what tools are analyzing this? And this is where artificial intelligence and machine learning are very practical. And finally, color-coded green, and you'll see how this corresponds in future slides, is the actual tokenization effort. If we have all the data and it's sitting offline somewhere, how can we get it on-chain, on the blockchain, embedded into our security token that we've created? We have a token, it has a price, and we're all trading it, but how do we back it up with the data that we've gone through all these hoops and hurdles to collect? So looking at the problems here, we see that private markets generally fail to provide the right answers to the questions that we just asked. Most real estate workflows and data is not captured in a digital format, leading to opacity issues. What is captured is fragmented, and so there's an added layer of risk when you make financial decisions based on that data. That risk increases dramatically with time, right? There's a time gap, something that we'll touch on later as well. And that's the need for perpetual real-time updates, not just collecting data once, but over and over again. And then finally, we can create a financial instrument out of that unverified data that we have, but without a pipeline to update the risk and reward of the instrument or token, the gap between the displayed value and the actual value widens to the point that it can't be purchased or traded at all. Imagine thinking that you have collateral and the building that was supposed to back it was damaged in a fire or other natural disaster. Well, that's no collateral at all. Question is, how do we actually update what's happening in the real world with your token? I'd also like to emphasize that there's many layers of data that need to be collected and standardized for full interoperability. In order to do that, we can reverse engineer how we arrive at tokenization. It's one step in a long equation, tokenization, with many different variables, some of which are never solved in current solutions, which gives us messy and opaque token products. Some of these variables as well, like insurance, are very sensitive, and we don't want to leave these unsolved because they can be massively influential on value. You could imagine that the transfer of data between layers could include metadata, which is what I highlight in this first arrow moving between the underlying asset and the asset data. Who, what, why, when, where, how, information about what's happening with the property and the information around that. Then you're looking at the asset data, which it becomes value essentially, and that value is reflected in the capital stack. So you're thinking about valuations and waterfall, right? How are these being calculated? Risk ratings. Particula is a great company that is creating ratings for risk that's being assumed on many different layers, the smart contract, the capital stack, and the underlying assets, and then the smart contract itself, right? So you have a flow of data, and there needs to be a little bit of consistency in how that's collected and how it's transferred in different steps of the tokenization process. So here's some examples of how you could start to tokenize or standardize some of this information. And I want to be clear that we're not trying to standardize outputs. Different investment products are going to have different risk and reward, and that's okay. What we want to do is standardize the inputs so that when we look at a real estate investment or other real world assets, we understand why they're different. It's okay that they're different, but we want to understand why. What's influencing the outcome? And the difference should be objective, not just that, well, there's more information here and less information there. We need to actually be able to look at quantifiable inputs, and we can only quantify what's been consistently measured. In other words, to properly compare the makeup of two properties, we have to be able to draw a direct comparison, which is what standardized data enables. So looking at the underlying asset, we might have a digital twin, we might have design plans, and we might have a management structure. When it comes to the actual asset data, we should be consistent in the file types, in the file names, how it's structured in a data room, how it's verified so that we can all come to trust it, how we can access it when it's necessary. And then is it even machine readable? There's so much information out there that can't actually be processed by valuation tools or artificial intelligence or risk ratings. So it has to be prepared to get to that point. Then at the capital stack, how are we reporting information about the asset class and its performance? What risk analysis? If we use one tool that's very sensitive and another that's not so much, you could have very varied interpretations of whether or not an investment is risky or not. And then understanding the valuation models. People can draw different conclusions from the same information and say this is worth a lot or it's not worth a lot. And then finally, with the smart contract, we should be working towards a unified smart contract standard that we can all trade and trust. So for the purpose of this presentation and to highlight what Building does, I realize that to this point, I didn't really formally introduce Building or myself. So again, my name is Matthew Schneider. I do believe it pops up in the corner, but I'm the CEO of Building Inc. And we focus on the collection, structuring, verification, and monetization of data as it pertains to real estate assets. How do we access it? How do we trust it? And how do we use it effectively, especially to generate some sort of return? So I'm going to be focusing on standardizing data and processes for real estate assets because that's our expertise. In our case, we like to start with practices, best practices. Can we implement these? And can we have consistent design plans and workflows and actually support the digitization process? You have to start with people. People work with data, they generate the data, and they're responsible for updating it. I use the example of designing. If we're going to be talking about taking a real estate asset and putting it on chain, do we know the real value of that asset? Do we know its history, its repair history? If you don't know what the future looks like for this property, can you really be so accurate with your financial projections? And then the asset data, are we handling this in a way that persists and evolves throughout the asset lifecycle? And this goes to the golden thread and ISO 19650 ideas, which are that there is a proper way to collect information and hold on to it, especially throughout the lifecycle of something like a real estate asset. So before we even talk about tokenization, right, we have to talk about digitization and just having consistency at the most fundamental levels. Then this starts to trickle to the capital stack where the value is realized and the smart contract where you trade that value. While I could create a whole segment about standardization and how we actually design and build real estate, in the nature of this event, I'll focus more on the technology side of things. If we want consistent data across assets, whether it's a commercial property or private credit or oil and gas, these blocks should not only become expectations, but mandates. So some of these building, capital B, blocks of standardized data could include the file types and naming, the metadata and context, how that information arrived, timestamps and verification, especially if it's blockchain based. That becomes an immutable ledger or notary for how information has arrived and changed over time. We can trust that. Third parties can trust it. Auditors can trust it. Then the institutional models. Are we using the proper models for calculating value and doing that across borders so that large investors can move large sums of money and be confident in that decision? And then finally, the industry standard structure, how you organize all the information. This is what we believe to be the building blocks of good standardized data. The result is primarily meeting a high level of scrutiny and confidence no matter where the asset is trading. If the underlying asset, its financial performance, and the smart contract it's wrapped in are inherently trusted, then we can rapidly trade the asset, even by AI agents. In a global market, we don't want to stop and have to check a few hundred due diligence boxes, which is going to greatly slow down the transaction. As Pat O'Mara would say, you can have instantaneous transactions because it's tokenized, but there's always a common denominator, which is accessing and evaluating the asset information. So looking at the blocks here, we have faster appraisals, right? Looking at what are the inputs of the valuation and what is that valuation? Can we have cross-border consistency no matter what country we're trading in or investing into? Can we have some semblance of similarity? smarter contracts, enforceability and compliance, trustless transactions and moving money, and then liquidity pathways. This is how you appease institutions. It's by meeting the expectations of information that they have. You can't just present information any way. There has to be some sort of certification, verification, and rating associated with what you've just created. So in the example of building, we've worked with a lot of real estate assets, and so have our partners of all sorts of real world assets, even in the billions. The way that we would approach this is we start not only at the real estate level, but design process if we can. We're into real estate, if you can tell by the name building, and that means we wanted to go as deep as possible in this process, even down to design, architecture, engineering, right? So we're looking for a couple things when we start there. Digital twins, that's treating assets or data as an asset that's going to be held onto throughout the lifespan of the property. And then good decisions about how the real estate is being built and maintained throughout its life cycle, from dirt to disposition, as we would say. So as the project moves forward, we want to be collecting information that's going to be useful in the future, even if it's years from now. And we can check on this information in intervals using quality checks, right? It's the power of technology where we can use a computer to automatically look for the vacancy of information and flag that. And we want to flag that because it bleeds into financialization, because non-compliance is risk. So we need past, present, and future context about the property's performance to determine risk and reward to the upside. There's a proper way to do this, and we often look at what the US does. The generally accepted accounting principles has a couple ways for determining fair market value. And so really what it's saying is that parties should be able to peek inside the valuation of a property and understand and verify how the outputs were calculated. And this is what we're helping with, right? Collecting the information, structuring it in a way that someone performing an appraisal or an investment can do that rapidly and almost in a trustless environment. Of course, there's still due diligence, and we encourage that, but if we can speed that up, it helps the transactions. And then finally, on the smart contract technology, blockchain tokenization, right? A lot of forward slashes. How do we create high quality contracts for every asset that are being securely fed data via oracles from the asset and finance level? So I included this slide. I think it's important. The presence of data is good, but it's not good enough. You might say, well, a listing platform has a deal room, or it has a snapshot, and it's a good start, but it doesn't really use smart contracts or tokens to their full capabilities as these wrappers, these real-time wrappers of risk and reward. We need the data to be structured, accessible, verified, and most importantly, dynamic. It's always moving. This dynamism, as I say, takes advantage of the token's digital nature. If it can update and reflect real underlying information in perpetuity, it's being used properly. And that's unprecedented in private markets. No more 7-year appraisal spans. This is now something that happens mark to market as often as we want. And that increases the tradability and the use as collateral and how much we need in our reserves in order to offset risk. I also use the example, if we were to, or we often talk about rebalancing portfolios at will. This is one of the benefits of tokenization. We can rebalance a portfolio at will. But based on what? What is the data that's actually letting you make that decision? You need a surplus of good data from the underlying asset that's been collected, structured, and verified to determine if the next trade is actually beneficial. As I approach time here, I've just got 2 more slides. So my takeaway that I'd like to offer to you is that we should stop tokenizing spreadsheets. We should start tokenizing information infrastructure. Right? You can read that again. Information infrastructure. That's what we want to be tokenizing. If we want liquidity in private markets, we have to treat data like it matters. You have to treat data as its own asset. that lives alongside the physical assets. It'll remove contingency and ambiguity, and if done correct in our process that we've outlined, hopefully can even apply a premium to the property. We're going to handle that data with care, from the way that we collect and process it to the verification methods, the ownership, the monetization of it, and then using it to make better decisions on the underlying asset. So time flies when we're having fun. This has been data standardization and private market tokenization to create trust, liquidity, and scale. Once again, I'm Matthew Schneider. I'm the CEO at Building Inc. Right? Building Inc. Perfect name. We're leading the way in actually making real estate more transparent, programmable, and always on. Put that in parentheses or quotations, sort of a new term, always on real estate. So through our platform, real estate workflows and data can be digitized, ownership can be tokenized. And what this does is it creates real-time price discovery and 24/7, 365 readiness for capitalization, insurance, and transactions. So that's the end of my work here. And I thank you very much. It's been a pleasure being able to moderate panels and share with the STO Spring Summit.
Thanks for joining us at STO Summit Spring 2025. Stay curious, stay connected, and remember, the future is tokenized.